I mean, everybody has challenges with volatility, but I remind everybody, just go back 17 years to a stock called Amazon. It also corrected 38 to 50% every year for 12 years in a row as people tried to figure out what this new entity was. And so there's always tremendous volatility in new and nascent technologies and new markets. And crypto is a new market. I still predict in 10 or 12 years, it'll be the 12th sector of the S&P. There's just too much productivity opportunity here around payment systems and all kinds of other attributes of these blockchain projects that we just don't yet know what the upside is going to be. And I'd argue this, if you go to any graduating class, particularly now, it's very timely to say this, ask any engineering cohort, you're going to find a third of the engineers go onto the chain. They want to work there. They don't want to work in the other 11 sectors of the economy. They want the opportunity to create something new. And that's why you've got so much intellectual capital going into this space. You know with certainty down the road that the next genius ideas are going to come from this. Any college, any university, any engineer, they all want to work on the chain.
Can businesses really benefit from crashing crypto? Most crypto coins have hit rock bottom and are surfing on their all-time lows. Even Bitcoin has hit below 20K, and stats predict that it might drop even lower than that. What would happen to all the crypto businesses that run their company on profits from this asset? Find out what Kevin O'Leary has to say about it by hitting the subscribe button and giving this video a thumbs up while you're at it. Kevin O'Leary is a Canadian businessman who is also famously known as one of the judges from the Shark Tank. He has written numerous books and has appeared on many business and money-related shows. The man has incredible insights on the business world and its progression. Recently, in his interview with CNBC, he talked about crypto businesses. Kevin has almost 20% of his shares invested in crypto, and while he didn't answer clearly whether he plans on buying more or selling whatever it is that he has invested, he did talk about the currency's volatility. According to him, these currencies are unregulated, and he wishes to focus more on the policy while he can invest in other such assets like the NFTs. The businessman also talked about retail investors in such an unpredictable situation. Should retail investors invest in crypto, considering the major drops in hope of getting more profits, or is the situation a little too risky? He brought up the example of Amazon as a stock 17 years ago and how it was highly volatile back in the time. People were utterly confused whether it was safe to invest in it or not. Today, the company stands very stable and ever rising. Just like Gareth Soloway, a famous trader, added in his previous interview that this asset is fairly new, it has only been 13 years since it showed up, and so people have got to give it some more time for it to become more stable. Kevin adds to this point of view and says that these technologies are fairly new and have tremendous volatility, but at the same time, they are highly productive and expected to succeed in the near future. He also added that the youth is greatly involved in these new technologies and assets. No one wants to go ahead with the old school ideas, and every university, every college, and every engineer is involved in the blockchain and wishes to create something new and fruitful from it. With crypto crashing, many companies that have invested in the coin are going down the hill. Coinbase has cut down 18% of their staff, resulting in unemployment and wage inflation. Companies like MicroStrategy have faced tremendous damage, considering they have taken loans to invest in Bitcoin and the coin just crashed below 20K. The question arises whether it's still worth investing in these companies. Kevin believes that there are two types of companies, one that uses leverage and the other that doesn't. According to him, it's always the companies that are highly leveraged that cause an overall benefit to other businesses. The companies expect more profits than the loans that they have taken.
There's two categories of crypto companies, ones that use leverage and ones that don't. Now, when you have a very volatile asset and you have the fortitude, I'm going to use that word, to use leverage to enhance your returns, you also run the downside risk of what happens when there's a major correction, as is occurring right now. You can get caught offside pretty quickly. And so Celsius, that's a good example of that. And I don't want this to sound trite, but let me explain how bottoms are made in any market. I don't care if you're in equities or in debt or in crypto or in real estate. You always need a big player to go to zero. That always helps, whether it's long-term capital or whether it's one of these crypto infrastructure companies, I would like to see, and I don't want this to happen, but it always gives you a good bottom when you get a large player over-levered that goes to zero.
It's more or like the scenario with MicroStrategy. Sadly, with crypto crashing, the companies might not be able to make enough profits before the loan payment. This can easily make a company go to zero due to high interests and loan paybacks. You always need a bigger player to go to zero. That helps, added Kevin. So when a company is reduced to nothing due to high leverage, that is almost always the beginning of the rebuilding process. The price hikes can be expected soon afterwards, and the restoration of the market can be naturally observed. While this is a very unfortunate scenario for a company, for an overall market, it's a bright side. It will be great for everybody else that survives. He believes that people will learn from the washout. He predicts that an event such as this would happen soon in the crypto world for it to rebuild its credibility and for the coins to bounce back. Kevin's words can also be linked to the fact that people have gone way too serious about crypto and have been investing every penny of their fortune and even taking loans for it. Crypto investments are supposed to be made from the money that one is okay losing, maybe 5% of a person's income, unless someone plans on becoming a long-term bull in the market. Kevin himself denies going ahead with any leveraged investment in crypto. He added that he might take loans for any other investment, but not crypto because of its high volatility. He can't possibly trust Bitcoin or Ethereum since they have dropped down high percentages. It might be a lesson for everyone else who has been investing highly on crypto, and that too a leveraged investment. People will learn from their losses and mistakes. Kevin also adds some interesting insights saying that platforms such as Binance and FTX have been doing pretty well with the taxes that they have been earning through crypto investors. So even if the coin is crashing, these platforms still encourage investors to invest and give a thumbs up for bounces and possible profits. Could it be the monopoly of these platforms to earn through people losing, or maybe it is because of these platforms that crypto hasn't completely crashed to zero as of yet? So maybe these platforms are the reason for the maturation of crypto as an asset and also its popularity around the globe. Since businesses are also highly affected by the government's overall economic situation, Kevin was asked if he thinks these drops would affect the US economy. He doesn't believe crypto would be that big of a problem for an entire government's economy because crypto is so far an independent entity. It's not just the US citizens that have access to it, but all of the world is currently obsessed with these coins. For crypto to have an impact on the economy, it has to be owned by institutions, and there has to be some policy governing these coins to legitimize them. So, in Kevin's words, if Bitcoin went down another 20%, it wouldn't matter. Not at least to the US economy or the government. Sure, it might affect the independent investors and leveraged companies, but that would be about it. Kevin also urges people to make a decision as this: whether people would invest in the coin when it is not owned by any institutions and earn through its independent volatility, or whether they would invest once the coin is legitimized and owned by entities that would make it a stable asset. About policy on crypto, Kevin had to say that there's not going to be something applying on all the market, but sure, institutions would want to go ahead with putting policy on one thing. It could be Bitcoin or Ethereum, whatever they believe to be more popular. Eventually, this particular coin would hit the top by being on the favorites list. He also added how he sees the coin being backed by the American dollar. Since it is all around the world, it would only encourage the popularity of the dollar, and against any other currency, the US dollar would be the primary one. It might even become an international currency system like it is when pricing oil across the globe. People would surely want to invest in a crypto coin with that much credibility and value. There's high interest in this area, and there is some active paperwork and legislation going on in hope of trying to put an identity behind these coins. Once this happens, people would expect complete transparency and a series of rules, since the coin would then become a part of an active payment system. The volatility that crypto has today can be eliminated greatly, and it might work in the favor of the Fed and the government as well. The question is, if that ever happens, would people have the buying power to invest in a coin that is expensive since a price hike can be expected? It's either that, or people would believe this theory of Kevin and start investing now at 19K when Bitcoin is at its all-time low. Just like Michael Saylor claimed that this might be the right time to dive into the coin. Even though nothing is certain about a policy being applied on crypto, if it ever comes up, would you invest before it applies or after? Let us know in the comments below. And make sure to like, subscribe to our channel, and share this video if you liked it. Thanks for taking the time to watch, and we hope to see you in the next one.